Hi there, good morning. Pleasure to be here. It's my first time at this event, so thank you very much for the invitation. Much appreciated. I will talk about the use of artificial intelligence in non-performing loan sales process and on online trading platform. NPL Markets is a London-based fintech company. We run an electronic marketplace across 28 jurisdictions, mainly in Europe and the Americas. We have about 1,500 institutional investors on our marketplace. Some of them are here in the room. And we trace the collections of some 3 million loans on a monthly basis because we do reporting, data management, reporting and valuation services for banks, loan services and institutional investors. In total, we have some 90 billion euros in our software. Internationally, we cooperate with the International Finance Corporation and the World Bank. In Mexico and Brazil, we have a specific cooperation to extend our non-performing loan marketplace in those jurisdictions. In Asia, we also work with the World Bank directly and the Asian Development Bank. And I'm part of the NPL advisory panel of the European Commission. There are, I think, two interesting things that are currently being discussed and maybe some call to action for some of you in the audience. The NPL advisory panel is working on a large review of European NPL markets, and we can definitely benefit from more input from the SEE region. So if you are interested in participating in this survey, in this research report, just contact me after the talk. There's another initiative of the Commission, which is very interesting, very early stage, is a so-called data hub for non-performing loans, where the Commission is going to the individual central banks and credit registers in different European countries within the EU and neighboring the EU, and is collecting synthetic data for confidentiality reasons from those central banks to provide better information to the non-performing loan market. So synthetic data is a use case of AI that I will not talk about today. I will focus more on the NPL sales processes instead. Last year we did a research with the Asian Development Bank of setting up electronic trading platforms in the Asia Pacific region. If trading platforms are of interest to you, I recommend looking at this article on the ADB website. It's very, very detailed, a long research that took almost all of 2023 to put together. Talking about AI applications, of course, everyone is talking about AI and is using AI to some extent, so we have to be selective. Can't touch on everything that is happening. It's a very fast-moving field. Here you see how we, as a relatively young company, are using AI currently, divided up into structured data management, which are the green boxes. So this is where we receive data from different data providers. We transform, validate, and map those data into a standard data format. For example, to create the EBA NPL templates that are now mandatory to use by banks in the EU. The AI element there is mainly one of, say, machine learning to predict collection cash flows for valuation purposes. Some generative AI applications are also in this area, where we try to basically map data coming from a bank or a loan servicer to a standard data template, and we have to basically individually match several hundred data fields. There is a translation problem, there is an interpretation problem, and an alignment problem where generative AI has been very helpful in helping migrate data from a seller of loans to the investor of loans. Mostly I will talk about how we use generative AI as part of loan NPL transactions and the due diligence processes that go along with those NPL sales. And this is the orange part, where we use generative AI for document classification, understanding what type of documents are in the virtual data room that accompanies an NPL portfolio sale, understanding the content of these documents, so not just what type of document they are, but also what's in there and what borrowers or loans they relate to, and then specifically extracting data from these documents, unstructured data, to enhance and enrich the loan data tape, which is then used by investors to value the transaction. So what is maybe a small anecdote that motivates me to look very much into the AI and setting up NPL markets in the first place, overcoming information asymmetries. We learned a very difficult lesson in the global financial crisis, that information asymmetry is not just, a theoretical concept, but it can cause real losses to taxpayers when structured finance products are becoming too complex and too intransparent. And the same then also applies to the investors and the banks who were holding these products. But more generally, 20 years ago, I was involved in the sale of a portfolio of loans, 1.5 billion from Dresdner Bank at the time. I was one of the investors who were bidding for the portfolio. This was at the end of their resolving their restructuring unit, mainly corporate loans. The transaction, even though there were only some 10,000 loans involved only, it was phenomenally complex. There was a 9-month process. There was a vendor due diligence done by dozens of consultants. There were lawyers involved and big 4 consultants, both on the seller side as on the investor side. The total due diligence cost for this one transaction was exceeded 9 million euros. So to me, that was one of my first NPL transactions, and the lesson I took away from it, there must be a better solution to this than spending so much time with so many expensive people running such a long process. So making NPL sales more efficient was my personal motivation to start NPL markets. Fast forward to 2023, a colleague of mine was involved in the sale of 10 billion performing loans from Silicon Valley banks that failed in the US last year. That, I think, to my knowledge, that was the first large-scale portfolio sale that used generative AI in the due diligence process. There was actually 2 different teams. One was a team of lawyers from Linklaters who conducted due diligence. The other was a team of developers, so technicians who were basically using the then emerging generative AI tools to extract data from the data room. And the result is, even 18 months ago, that the technical team was 10 times faster, 10 times, covered 10 times as many loans, as accurate as the lawyers. And so in a way, and of course at a fraction of the cost, so one can say these smart use of technology can create significant efficiency gains. Not always by a factor of 100, but it can be as much as that. So let's look at that. So there are other uses of generative AI. This is our virtual assistant who couldn't be here with me today, but he generally presents our case studies. It's a completely, it's an avatar. Everything is generated by the AI, presenting our portfolio case studies. You know the chatbots that people use in their customer servicing, where questions on where banks can answer questions to their customers. I'm focusing on loan due diligence driven from transactions on our marketplace. So I mentioned Yeah, there is a loan data tape that has to be given to the investors so that the investors can do their pricing analysis during the bidding process. But there's also pretty much always a virtual data room that contains unstructured documents, mostly in form of PDF files, but it can be anything. It can be Excel sheets, it can be pictures, maps, location maps, excerpts from the land registry. So the types of different documents that are in these virtual data rooms can be very broad. I will talk specifically about identifying which type of document is in the data room and then what key values can be extracted from it. In order to enhance the data tape, to basically improve the understanding of the borrower and the situation. So how does it work? This digitization process, you set up what we call an AI-driven document pipeline. So the AI is picking one document after the other, and first the machine has to understand what are the basically textual and value components in that document. Because if it's a scanned PDF file, sometimes very poorly scanned file, you might know that old documents in the NPL market, sometimes you see legal documents that were scanned 10, 20 years ago in a very inaccurate way. Yeah? So the page is highly skewed, half of it is missing, some might be redacted for confidentiality reasons. So reading these documents in the virtual data room is, even for a human, is a difficult task. So the first element which I think is maybe a bit underestimated in the current discussion of AI, everyone focuses on these large language models and how fantastic they are in dealing with many different languages, and they truly are. So, but in order to get there, you have to enter some text to the model that says something real, yeah, in whatever language, but it is a real text. When you see a picture, a scanned picture of a loan contract that is poor, yeah, inclined, it's not properly aligned, then you don't have that type of information. So the recognizing the characters on the page is an important technical step in the digitization process. We refer to it as OCR, optical character recognition, and that is the precondition to then actually have text that can be analyzed by the large language model. So here you see this as a schematic pipeline. So you take the document, you use an OCR tool. I'll comment on that a bit more in a moment. Then you have textual information that can then be fed into the large language model, for example, to identify what type of document it is, or to extract some key values to eventually put additional data fields in the structured data tape that is the basis for the investor valuation work. This is a real example of an OCR. So you see this is a legal document, and it's a bit small. The red boxes indicate where the software has found a word or a textual piece of information, and including handwritten entries here on this side, so signatures. So it is actually working extremely well. It shows that pretty much 99, if not 100% of the textual pieces of information on this picture, yeah, it's a PDF that is not represented in form of text, of individual text blocks, can be recognized accurately. There are, however, costs involved, and the more difficult the document is, the more difficult and more advanced the technology that you need to extract that information is applied. And we try to show that here in a table where you go from a document which is just a PDF file created from saving a Word document as a PDF. That's still a digital representation of all the text. You don't need a complicated OCR tool. You can just use basically open source software to analyze that text, and it's very fast and accurate, and it works for pretty much all languages in the world. So that's great also for the SEE region, because there are some smaller languages here. So if it's a proper digital document, the OCR problem is not very important. If it is a scanned copy with a lot of tables, a lot of handwriting, stamps, and what have you, that make life more complicated, yeah, then you need to upgrade the OCR technology, and that can become expensive. So we call it here the deep analyzer, or the expert analyzer can cost, say, $50 per 1,000 pages. That's the most expensive tool we are using right now. And that can be, yeah, that is a significant expense that needs to be taken into account. A second use case, so hopefully that gave you an idea how we use AI, OCR and AI document pipelines in our due diligence process for NPL sales. Another use case that I quickly wanted to show you is that is more related to performing loans and to reporting processes. So not necessarily related to a sale of a non-performing loan. And it has to do with monitoring financial covenants in loan contracts. So typically, corporates have to provide certificates on their financial covenants once a year at least, maybe more frequently every half a year or every quarter. And they provide financial statements. So that could be the annual statement including all the notes, or it's just a short interim statement. And the task is now for the AI to understand from the loan contract where is the legal clause that defines the covenant, how to calculate the covenant from the financial statements that are provided. And for those of you who work in that area, it's quite complicated. It sounds very simple. Typically, it's just a ratio, a net debt to EBITDA, something like that, typical leverage ratio that is being monitored as part of the financial statement reporting. But the calculation of net debt, the calculation of EBITDA, there can be exclusions, unusual ways of how to do it. So there, the AI has to not just do the calculation, which is nearly trivial, extract the information from the statements, find the right balance sheet items or financial income statement items, and most importantly, understand the legal clause in the loan document to do the calculation. Of course, typically that has to be done only once, and then you have a process that can run automatically every quarter, every year. So financial covenant monitoring, yeah, it follows a similar data processing pipeline, and the result of it is that you can put all these covenants in the online monitoring and reporting system. You can create early warning signals. We had that discussion, I think, earlier on the panels. So this is how it looks on our platform. So you have this amber region where the covenant, the particular KPI that is being traced, would create an early warning signal. So red is in breach, white is everything is still okay. And the thickness of that amber region, early warning region, is something that the user can define themselves. So that brings me to the conclusion. Quick summary. We didn't really discuss the use of AI for structured data manipulation, so the prediction of cash flows for valuation purposes. But it is an important part of our research to, for example, determine optimal workout strategies in the workout process to determine optimal restructuring proposals. Yeah, we heard on the panel this morning that banks have generally become much more cooperative and proactive about their restructurings. So the AI, especially when you deal with a large number of loans in the consumer space, can make suggestions how to best when and how to best restructure the loan. extraction and classification of document during due diligence process in a non-performing loan sale, and data migration and onboarding of the data. These are basically typical daily use cases where we use AI in our business practice. Thank you very much. That finishes my